it's my time, think it's my year, yeah. I really feel it's my time, think it's my year, yeah. I really feel it's my time, think it's my big dog, walking big talk, young veteran, living legend, bet I'm better than them. This is my ship, I'ma jack it like Letterman. Y'all better not let them in, they gon' rotate this, so I keep the pedaling. Started a chain, the cycle is heaven sent. This is from God, but I'm not your reverend, not in the pulpit. I'm a pit bull in this element, yeah. Said you gon' pull up, then settle it, yeah. I've been married to this hustle, this is my ring, watch I step in it, yeah. And I ain't even got it, y'all, but I'ma get it here. Watch I touch down, pulling plans out the clutch. Everybody getting crushed, the cut down is for us now. Have to work something, cause I had nothing in my pocket, yeah, I did all that. Big plans, partners trying to make profits, yeah, I did all that. Work, sweat, and tears breaking, even no wins, yeah, I did all that. Had to make it happen, putting hours in my practice, I did all that, yeah. I can't take no loss, yeah. I don't even know what it costs, I hit the ground, then I go off, yeah. Hit the ground, then I go off, yeah. I can't take no loss, yeah. I don't even know what it costs, yeah. I hit the ground, then I go off, yeah. Hit the ground, then I go off, yeah. Run it, ooh. I really feel it's my time, think it's my year, yeah. I really feel it's my time, think it's my year, yeah. I really feel it's my time, think it's my year, yeah. I really feel it's my time, think it's my, yeah. Run it, I can't take no loss, I don't even know what it costs, I hit the ground, then I go off, yeah. Hit the ground, then I go off, yeah. I can't take no loss, I don't even know what it costs, yeah. I hit the ground, then I go off, yeah. Hit the ground, then I go off, yeah. Run it, ooh.
Hello. How's everyone? Welcome to another live of the Conscious Day Trader. It's a Sunday. I haven't fallen asleep, luckily. Yesterday I tried to do a live and I fell asleep. Let's see if everything is working. Hi Daddy, hi Sigma. Kumar, hey. Difficult market to trade past 2-3 months. Yes, it has been. It's been a few ups and downs with crazy news, Trump stuff. But we're going to look at everything today. I haven't looked at the chart yesterday. We're going to look at, I thought I'll turn on the screen, do my normal preparation for the week. Let me put that music down a little bit. And yeah, we're going to start by looking at the COT report, look at what we're looking at, what's interesting. We're going to look at cycles. Where are we on the cycles sort of arena? We're going to also look at the price action and look at the levels of where price has gone. I'm going to show you something new that I've also been looking at, sort of the regressional analysis stuff. It's going to be fun. It's going to be geeky. I haven't done this for ages. The reason is, one is family time, don't have a lot of time. Secondly, because of the sort of stuff that was going on in the Discord and that big sort of past method stuff, being busy with the guys in the background, but at the same time, I didn't want to just come here and sort of show off trades. It didn't sit with me in a nice way. So I think something that's more on the front, hey, this is what I'm doing, here's more something you can take away and think about and hopefully help you with your trades and your analysis for the week. Might be more useful than just showing you, hey, this is a past trade or whatsoever. So you tell me if that's going to be useful. Make sure you like, guys, the stream. Make sure you interact with me and ask questions. I'll be here maybe, we'll see how much we do. Maybe we'll do an hour or so just to get the juices back going. But what we're going to be, always start with, we're going to start with a little bit of the markets on the news. So let's jump on to baby pips and see what the week looks like. And bearing in mind, I'm doing this with you. I haven't looked at what the calendar looks or any of the charts since Friday. Had a good euro short on Friday before the NFP. Didn't trade the NFP on Thursday. That was a day early. Right, let's see. Put our filters on. I'm currently trading most of. Let me see if I can sign in here. It won't let me. It's taken my stuff out. Anyway, we need USD, GPY, CAD. Pretty much all of these. Euro, yes, yes, no, no. That's fine. Right, so let's go to the date today. And tomorrow is Monday. No news tomorrow. And Tuesday, we've got Aussie news, Euro, CAD. What types of news? Business confidence, interest rates, balance of trade, and PMI. Okay. Quickly have a look at all the days. FOMC on Thursday. Initial job claims. Okay. USD dollar then. We're waiting for late week reactions. Obviously, we have the big news going on with all the stuff. Israel, Palestine, all these things going on, and Iran, and so many things with China and everything that's going on. Obviously, there is an element of risk increased with the world at the moment, but that sometimes is a good thing because it increases volatility, especially on some pairs that they don't move. So what we've got here, Friday, we've got manufacturer, GDP month on month, and manufacturer. So big day for pound on Friday. So we've got Thursday, USD. Tuesdays, we've got Aussie and CAD, Aussie and CAD, and Wednesday, nothing. Okay, so quite a simple, you are right there. COD is delayed until, this is Scott, by the way, isn't it, Sigma? I think it's Scott. COD is delayed to the 4th. Yeah, so the data that we're looking at today is from the 23rd, I believe, was the last. Let's have a look. God. Release schedule, let's have a look. That is you, Scott. So June 23rd is going to be delayed. Till the 7th, so tomorrow. I can't remember if that's going to be the release though, or if it's going to be the Friday release. We'll find out. But for now, I have to analyze what I've got in front of me. So we're going to be analyzing the latest release, which is the 24th. Published on the 27th. So we're looking at the data that is a week and a half old. That's to take into consideration, but it's not that bad because things move for multiple weeks. So having a week and a half delayed data is still okay, as long as you're using it in the right manner. So as of news, we talked about Thursday, we've got FOMC. Friday, we've got news on the pound dollar, CAD news on Tuesday, a bit of Aussie news, but nothing really crazy following the NFP. Obviously, you also have the aftermath of the NFP. That's something to think about. And I've just realized that you're just watching my face at the moment. You're not watching anything that I'm showing you. Let's go to this one. Let me see if you can hear me. Can you hear me? You can hear me. So what I was talking through there was the schedule. On the 7th here, you can go on the release date of the CFTC, Commitment of Traders, and it will give you all the release dates, especially if there's around holidays or something like that. you can find it and see it. Let's put that smaller. Okay, so, and I was also looking at the news. So we looked at Tuesday, bit of Aussie news. Wednesday, nothing. Thursday, we've got FOMC and initial job claims. So that's gonna definitely impact the USD and the pairs of the USD. So we're talking about all the macros. We're also looking at Friday having quite a bit of an unemployment rate on CAD and pound dollar as well. So quite a bit of news there for end of the week. So it's news heavy on the week, and also the aftermath of the NFP for Monday tomorrow. So let's go on to start with the JPY. And what I'm gonna do is I'm gonna load my indicators. If you've never seen these indicators before, these are the speculators from the commitment report. So if you go onto a free version, which I can put it in the comments actually, for someone who's re-watching this, you can go and see that. So you can click on commitment of traders, you'll find currencies, crypto, indices, bonds, everything on here. And then you can click on whatever you're interested in. So for instance, down we see the Japanese yen, that will give you the dashboard of the Japanese yen for the COT report at this moment of time. And if that is way too complicated, and let's say you've heard about the COT index, which is Larry Williams' way of looking at the COT report, you can just literally just watch down here where he's got the commitment, and you can see that is a selling overall bias on the 36-month and the intermediate 6-month. Open interest, you can see is quite on the high end compared to the low end. I'm just giving you now what I would be looking if I didn't do any of my own analysis. This is how I would interpret sort of the overall bias from such a commitment of traders. And then you have the detailed reports here. You can see the legacy report here, minus 147,000 on commercials, an increase of 132 on the large speculators. And the retail, you can ignore the retail. Some people like to trade it. It's not very repeatable, as in like consistent, the retail, I find anyway. But in terms of large spec, I only look at leveraged funds. And yes, I have on this here, I've coded it to do speculator longs, which is all of the speculators, which includes dealer, asset, leverage funds, and other reportables and non-reportables. But I like to look only at leverage funds. The reason is because they are using leverage, and their sole reason they're there is to speculate price, and multiple millions or billions have been spent to try and do what we're doing, but they're doing it at an institutional level. So it would make sense to be analyzing these guys. Now, just because we're analyzing doesn't mean that we're going to be trading like them. For instance, I'm a contrarian to what they trade. So I normally try and find places where they're way over positioned, and we'll see a couple today, and try and go on the other side when they're starting to look for profit taking. Now, that being said, so this is a really nice report. It also has seasonality in it, so you can look at seasonal trends here. So you can go on Japanese yen and say, let's say I'm trading the Japanese yen today. It's got a nice current day and current month. So we can see we're in the beginning here of this month in July. And the overall trend looks like it's a sell-off, right? So we've got the last 2 years, they're selling off by the end of August. And it's quite consistent here with all years, so the 10 years, the 5 years, the 15 and the 20 years, we're going from 0 to -1 here. So it's looking like July is the heaviest short place to be for the yen. Does that mean now, let's go and short it? It doesn't mean that, because you'll find a lot of the times you can get it completely wrong if you're just trading seasonals. And I do need to say also, let me make sure I put that in, that this, can I put that one? There we go. This is for entertainment. Don't take this as advice. Obviously, I'm sharing the way I like to look at trades, but obviously use this as a way to, Yiannis said it, so I'm going to short this and buy this. This is not what this is about. It's for more for you to have a little bit of a, this is interesting what Yiannis is doing. Maybe there's something into this. So that's that of the seasonal, and you can very quickly look at the USD dollar, for instance, because normally we trade it with that. That is also, July is a heavy, look at this, minus 2.2 on the 2 years here. So heavy shorts in July on the seasonals there. And let's look at the pound. Pound is on the upside in July. So pound long, USD dollar short. That will be an example. If you're writing this on an Excel and you're like, I want to create my bias for the week. So I've got pound long, I've got JPY short, I've got Canadian dollar. Where's it starting? We are July 0.0 neutral. I would put Canadian as neutral. Swiss, neutral towards bullish. Aussie, neutral. And what do we know? Euro. We're looking at a bullish sentiment overall for that period of time. So average change, something like that. Obviously, you can use many ways of looking at seasonality. The other one is looking at cyclical trends. If you've never seen cycles, this is something that I use a lot. And you can go to, let's go symbol search. For instance, I want to look at the euro. This is the USD euro daily. And then if you've never done any cyclical analysis, go back and watch one of my videos when I'm doing cyclical analysis. But this is basically, it takes the price action that we have here, and I like to add, let me find it. I'm gonna add a bit more, 850, so we're gonna do it 1,200 update. So we're looking for is there a cyclical pattern into the market that happens on the euro dollar? And we don't try and best fit this. We're trying to find a cycle that is actually works quite well. The highest two cycles here are these two, and we can see just including those two cycles, the long of 206 days and 317 days. The reason it's red is because the strength is low, and because it's basically, is saying it is quite accurate, but you're using only two. Ideally, you want to use three. So these are the top three, which would give you a better price reaction to the cyclical analysis. And as we can see here, this is played really well. We'll find it in the top in January 2025, find the top in September 2022. Finding a mini top there in 2021. Close enough. This is 3rd of October into 6th of November. Okay, so there is a little bit of a delay, but as you can see, pretty close to identifying these tops. First one there, this low, pretty close to this. So this sort of analysis is another seasonal way, hi Fred, to look at data. So as you can see here, we've had, this is the top here. We've passed where it predicts to be the low in the 17th of June. So I would be quite, for me, when I'm doing my bias, I look at this and I think, all right, I don't want to be shorting euro right now for a lot longer. Last week, my bias on euro was short. I traded all my trades short on euro. But how long I can do that, we might be getting to that bottom end now. So I might be a bit more wary of what's going to be happening on a cyclical level. But if we look at the USD, let's see if I can find the USD. What about the pound? Pound, similar graph. Let me just look at the pound again. Or let's see. Just look at the dollar index. Pretty much on cyclicals, if you focus on the dollar, you're covering every major that you're trading. So it's not a bad asset to analyze on a cyclical level. And we do have a nice peak here. This is a really good cycle. 2 good cycles here, really good cycles. So this should be quite a good predictable cyclical analysis here. So we're predicting a top in 16th of March and it came on 20th of March. So that was pretty accurate there. If we look at the predicting a low here on 15th of March, the low came in 21st of Feb. So again, pretty close. Obviously, it's not going to be perfect. So you can see here, it finds this high, this low here, the market's moving up. It is finding the low, but it's not giving you, this one is good, absolutely perfect. Identifying the high here. The low here, it looks like it's sustained itself. So we haven't, even though this is now all coming up to the upside. By the way, when you look at this curvy going up, it doesn't mean that we're going upwards in the market. Just this pink thing is time. So this is a timing tool rather than a price tool. So at this moment of time, on 30th of May, it was anticipating a low in the dollar. And we're looking at another high, significant high on the 26th of August. So that is 2 dates that to keep in mind if you're analyzing cyclical analysis in part of your analysis. So we talked about seasonals. And you can find seasonals if you just joined on Market Bull, simple seasonals, don't make it complicated. There's multiple ways. You can also go on TradingView and put seasonals on there. And it has this seasonal table that you can use if it loads. Really nice graph, everything that you need on there. And then that obviously changes when you change your assets. That's quite nice. Go into July. And you can see the overall standard deviations and so on. This is closed. This is the difference in this is giving you price action close month on month. And you can see the difference here. It is saying that JPY as a seasonal, July, quite bullish compared to when we looked at the tendencies of the JPY on the indexes of each year. So we're looking at the 2-year, 5-year, 10-year, 15-year, and 20-year. So this is a graph of those individual years combined. So the average of the last 20 years, what has it done? And it's quite a different picture. So you can see here, especially in the last 2 years. We've got a 1.8 negative value there. That gives you, if you don't want to get complicated, you can stick with one. and understand the one. And it shows you on the graph here what that looks like. So if you go month by month, you will see it gives you the percentage here of change. So there you go, minus 0.8 on this month, but plus on 2.03, and that's how it calculates each month from close to open, open to close, and so on. So that is the seasonal graph. And I believe you can manipulate it a little bit as well. Let's see. Where is it? So you can start from whatever year you want to start. Let's say you want to do from post-COVID, for instance. If you want to discount COVID, you can put post-COVID data in there and they will give you just post-COVID data. I think the difference from what we looked at seasonals and this is that that moves into August because it's looking at the close of the month, whereas the other one is an average of the line. So if you stick with one and you understand it, then you'll be okay. Also, you can do your own seasonals as well. You can download the data from investing.com. So that's something that is good to include in your analysis. So we talked about that, talked about this, news, and let's close this here. And then I want to bring up Tableau. Give me 1 second. So yeah, euro, as we talked about, I've been short, but it's looking like these short big moves have been coming to an end, and bullishness has been hitting euro quite a bit. We'll see what it looks like on the COT report in terms of leverage fans. What are they saying? And the only way I can do that is on my Tableau dashboard, because I run it from here instead of the other one. So this is what I was explaining, that you can do your own percentage change close. So I've downloaded the data from, you can either download it from yahoo.com or you can download it from investing, I think it's investing.com, and you can create your own, and that way you can have every asset here, very easily change it and see the differences that are happening there. But for now, we're going to be opening a different one. We'll go to leverage funds. I've just realized I've opened my other computer, so this is totally outdated because I use another PC now to run the Tableau, just because it's a lot quicker. But I wanted to show you my dashboard. How could I do that? I could send it. Let me. Okay, I'll show you the online versions now, because this doesn't have my latest stuff. Yeah, I'll show you another one. So what we'll do, we'll use this one because it's pretty much the same. It's just I Speculators are very close to leveraged funds, but I haven't got my dashboard right now, so I'll show you this. So what I've done in this one, I've coded the COD report to look back 14 candles and create a standard deviation at the historical data of what comes in every month, every Thursday. Oh, you can't hear the music? Let me hear what you're hearing. Let's see now. Maybe you can hear it now, let's see. Can you hear it now? Sorry guys, let me see. Music. All right, so now I think you can hopefully hear that. And we can go back to the charts. So what I was saying is this is a 14 candle back. When I say candle, it's 14 release of, and we can go back to 14 candle release of the COD report. So give me a second, I can hear myself on the monitor. What have you done here? Audio. I got you. Just let me figure this out 1 second. There we go. This one is monitor off. All right. That should be working. So yeah, 14 release dates out, and then I create a moving standard deviation that's going to give me how far that information is far from the mean. So what I'm talking about. So we can see here, if I put it on a weekly, that will give me 1 bar. And you'll see that this white line here is a standard deviation of 2. It says 1 there, but I've coded it to 2. So anytime the standard deviation goes above this line, it's telling me that with historical data, this is out of the ordinary, that the price will tend to want to come back because speculators are priced long and above the standard deviation. And what we see then is that the price tends to come back because they're looking for profits. And that's what we're seeing here. For example, if you take a horizontal line here, like there, you can see standard deviation above, and then on that week we have a bearish candle, and it took another 1, 2, 3, 4 weeks, and then we had a really decrease in the speculator holdings of long positions, which means profit taking. And if you line that up with a follow-up of drop-off like this, then you're looking at what we call profit taking pretty much. In the speculator side, you don't get the noise of every other asset that we talked about. So you only get the people that are leveraging big leverage to speculate price. So you can see a lot of the times we have the buildup of sells at the same time that is happening. So here we have an increase in selling, with two things: to come off your longs, you have to have you have to be selling. So that is the increase of selling, and then we can see a steep increase of the sales above the standard deviation. Right, so we're looking now at the opposite thing here, and we have the first green candle there. Now, with the shorts, it's a little bit tricky to do counter, and I was talking to this about the guys from the past method. It's a little bit trickier to do counter trend or reversals on the shorts. You do see them, and it does happen a lot of the times, but you have to be a little bit more careful and look at historical data. For instance, this one here, we had a big influx of increase in shorts in this area here, and then 1, 2, 3, 4 weeks later we had the big bullish move. So when has this happened again? Now we've had this big influx of shorts here. Let's do a drawing. So this one here, this one here, this one here, and it goes so on. Now, this is another example of where you do have a increase above the standard deviation, but obviously this is moving, right? So we're seeing the delayed data. So as we're going further back into the ranges of, we're not seeing the actual correct standard deviations of this. So it will look a bit different as we're going back in historical data. But in the first maybe 200 to 300 data points, this will be quite accurate. And the most accurate is within the 100 for data points. So we're looking at this pretty much will be the most accurate here. So that's something to pay attention to with the COT report. If we go through, we can see that the JPY has been on a historical high. There's enormous amount of buying on Japanese yen, and it started in January 2025, and it peaked in the 5th of May, and we're still holding. Now, there are some profit taking starting to happen, but this is something that, in my opinion, you don't touch. So I wouldn't be touching the JPY right now. It's just scary. This has never happened before, and it's something that is, you don't want to be caught in something that is a black swan event which is happening for a whole year. And even if you're getting these shorts, it hasn't looked very, very clean, and you're getting now a nice, oh, go away. You're getting now a nice formation now, which is looking quite longish. So I wouldn't be touching that even if the COT report is showing otherwise. Now we looked at the euro. The Swiss, we're looking that we had a peak here above on the shorts. Now also what is interesting to see when you're looking at the COT report, especially the speculators, is to see what are the highest levels that they've ever been at. Have they been at a level where it's never been before, for instance, up here? So that is 64,000 in 2018. Another one up here is right in the beginning in 2007 when we had the big crashes. So anything above sort of this arena here, anything above this arena here is way out of normal, right? So we've had, 2007, 2018, just twice happened in the history of the Swiss. Now this came close here. You can see that, look how many shorts have been there. And then we had a massive drop in shorts, and we see the aftermath there. So also the value of where they're trading matters. And that's why in my new dashboard now, I've created, let's look at this. So I've created a percentage of change. So how much have they changed from longs to shorts? Because that is quite interesting to me. And this is showing you change here in thousands. But if you don't look at the chart and you see, okay, they've increased their shorts by 1,400. Let's look at the Swiss since we're talking about it. So they've increased 1,000 positions, 215 on their shorts. How much is that in terms of historical level? And is that impacting sort of the movement of the Swiss? That's the questions you have around these things. So that's why I've created my own dashboard to be able to answer these things. But you also have this percentage of interest. So you can see that they're 41% short compared to 11% of the open interest. And open interest is every single trade that's been taking place between the two dates. So that's what you're seeing there. So for me, the Swiss has only just returned back into normal ranges, and we are seeing a start of a build up here of longs. So if I was to look at this, even though there's a lot of long opportunities that have happened since the lows below here, the standard deviation, we are coming across, and there's a lot more movement to happen, I feel. It is a tricky one though. I haven't traded the Swiss quite a bit to see how well it performs, because even though it does give you these glimpses above standard deviation, it has followed through. So it's not been quite contrarian as it has been on the euro and the pound. So you can see all these areas here. This is a sort of signal for me to short this as an opportunity, but the Swiss is doing kind of the opposite here. So if anything, I would be looking at the shorts when it comes to COT report and leverage funds for the Swissy. We'll look a bit about price action. I don't want to make it COT heavy here, but this is the detail that you need to go in order to understand the COT report and to get clarity on what you're trying to achieve on each week. It's been a bit of a better picture on the pound dollar. So you can see here, once, twice peaks, another peak there. So now you might say, okay, you saw that peak, but how would you know that's a peak? That's why you have to wait for the drop off. Okay, so when we see this candle here, if I take my replay, and this is golden information now for the COT report, guys, write this down. So now we've got the COT report that is showing longs, right? We're above standard deviation. You might be thinking, I want to short this. I want to short this. This is looking at a great opportunity here. Next candle, another build up of longs. So we've jumped from 103,585 to, 111 to 35. So nearly 20,000 contracts added long. What happens next? Another build up. just go to the next candle. And boom, that's when you have the first release of, they've gone from 135,000 contracts to 105,000. So we dropped 30,000 contracts there. So that is when we are interested in looking at short opportunities. So then you go onto the sort of 15-minute. Let's say this is your trading day. So you've seen the drop. Has this taken me back to, are we still there? I think we are. Let's go 4 hours. That doesn't look right there. Let's see. Yeah, it is there. So 24th of July, 2023. Okay. So you go to the 1 hour, for instance. Let's see what happens around this time. Remember, you have bias short here, right? So you might be seeing this and saying, wait a minute, that doesn't look like a short. But look how the bias comes and plays in. Beautiful. So, you know me, you know repositioning. This is a great opportunity to reposition on a higher price. Your bias is set for short and you're getting some beautiful movements here. You're getting this movement here for 200 pips, all the way down to 300 pips. So that is plenty for the whole week. You could be trading this on Monday, right? So you're getting some repositions here, and then you get your sell-off all the way to Friday, paid off. Next week, 31st, straight down, easier week, paid off. So just give you an example of how you can take your bias into the following week. That's that. Let's look at the CAD. Yeah, CAD is an interesting one. Another one, like when you look at the historical data, you see these peaks, amazing. Good. So the longs are working really well. The shorts are working really well. Big short here, big short here. And now we're in that short level now. So this is an interesting one. We've got a sell-off, but the drop in the longs, but obviously that is within the standard deviation range, and we have a drop-off in the shorts, jumping from outside the standard deviation into the standard deviation. So it's going back to the norm, if you want. So that's something to pay attention to. Where do you want to be trading something that is in the normal range? You don't mind it, but you can be biased both ways. And if you see a setup price action, let's say I jump onto the 1 hour and I'm seeing it's within this level, price starts jumping up, so it comes like not this one, where is it? Price comes up here, and then you want to short it, could be a good opportunity, does the other direction, probably wait for price to come down, to go up. Both are viable because you have a neutral bias. That's how I sort of trade. So if I'm interested in something like the CAD and there's no bias on the COT report and there's no added information on the seasonal, then I can trade it. I can literally trade anything I want with price action, but I will either have a strong bias, which will either increase my pip profit, or I can go again into the market. So let's say this is, let's do an example. let's go to a random date just so we have some data, whatever. If it lets me. So let's say this is the open of London and I have an opportunity to go in and I take a trade here to short this, okay? Now, if I have a bias that this is short, I may be comfortable on spreading this trade and repositioning this trade all the way up to that level. But let's say my bias is neutral because it doesn't look great on the COT report, I'm not 100% sure what's going on, then my bias can be up to that level. So I can decrease my exposure by shrinking in my repositioning and do the opposite on the profit target. So if I'm quite confident in the COT report, I can run it all the way to the next level. Or if I'm not so confident, I can look at the price action and say, well, that looks like a nice area of interest. Go away. Where is my favorites? It's here. That is another nice area of interest here. So I'm going to target that fair value gap, which is going to give me 20 pips, happy days. If that price comes back up, I can get another 20 pips and so on. So you can use the COT report, and this is where people get confused a little bit with, and with the past method as well. The guys in the past method is like, there's always the hunt to make it as automatic as possible, right? So you look at the COT report and you say, right, when that's above the standard deviation, we're going to short this. We're going to short it for 20 pips. We're going to put our stop losses there. So you can repeat that, and that's comforting because you can say, right, I can repeat that 1,000 times, and that's going to make me profitable. However, there's so many variables that you have to think about in order to make it like an automatic system. So it might be possible now with AI, you can say, right, when I have a bias long and this is within my range that I've deemed acceptable, then you can do 20 pips. If not, you can do 40 pips. That is definitely can happen. It requires money. You have to go to a person to create bots to do this. It also creates a lot of time for you to do it instead of doing it manually. So the manual aspect of you is that you have to understand what is the sentiment, what is the condition of the market. Are you on a risk week? Are you on a risk off week? And the risk on, risk off will be a clear COT report that, let's say, is over leveraged and you're looking for short opportunities. Then you can go to your normal 40, 50 pips or whatever you want to target for the week, or 100 pips. And then you can also have rules where you're saying, right, nothing's clear right here, so I'm going to be neutral and I'm going to be price action based, but I'm not going to exceed these amounts of levels that I've set for the week. So I hope that makes sense. This is how I think before every sort of starting of the week. Then what I'll do, if we go to, let's go to like a more recent date. So let's add this indicator in. Not that one. I'll just close that. Go on to I do want to show you one thing that I'm actually using currently. I haven't showed it to anyone yet, but it is really, really good indicator. Before I do that though, I want to show you a rough sort of playbook style that I'm currently using when it comes to bias. Where is it? Jesus. Let's get a new one. Let's just put anyone right now. Okay, so we've got last Friday, Thursday, etc. Okay, so we're looking at the deep red. So let's say we're taking the open here. So we're looking at this open, and if you followed me for a while, something like, if I have a bias that is long or short, and we're looking at the previous day here, I would do my normal previous day high, previous day low. And we're trading above the previous daily high, let's say, right? So if I go to the 1 hour, I think this is gonna come to the top side. So let's just say it's taken the high here. This is previous daily high, previous daily low. So at this, on the daily range, we're looking at a premium right now. So we'll be looking for a short. If my bias is short, I can take this trade with no fear. After the close of the hour, I can take this trade to short it, let's say. Now, if I see something that I've taken a trade and I've taken I normally go for like 10 to 20 pips. So that would have been a 20 pip, easy, happy days. And so on. Let's say now this was a short bias, long bias, sorry, and that is on my long side, so I have to wait. Then I wouldn't take this trade. Maybe I would be looking at other assets. Maybe I would consider bouncing the price off the daily high, but that would have been giving me not a lot of leverage to play with. The other option is to take the equilibrium, the 50% of the daily range, and the last opportunity would be to wait for a bounce of the previous daily low, but as a minimum take the 50% of that range. So it would be like this one here, with, if I'm long, I can play this trade to a level because I have room to play with. As you can see, this is a really nice retracement here to a fair value gap, or Fibonacci retracements to 50%. If you put that, I'm pretty sure that is a close to 61% there exactly. So that, for instance, that would be something that I would look at and say, if this price action is happening, I would go straight to my bias. What's my bias? My bias is long, happy days. I can jump in even at the 50%, even at the 23% sometimes, because I don't want to miss the trade. Because I'm confident that this I can reposition out of it. If I'm short and I see this, then I would wait for a bounce. And I might have taken this trade here and it would have worked out, but I might have to wait for a little bit. If I'm neutral, I can take both these trades, and I have done that sometimes. I wouldn't recommend it if you're not experienced with this, but if I see a long opportunity and then a short opportunity in the New York session, I might take both, just because if I need to meet my daily targets. In an ideal scenario, you don't want to be changing because you don't want to be hitting on the other side. But with all the work you've done on your bias and all the work you've done on the seasonals and the cyclicals and the indicators, you can be at least confident that you're putting the slight edge towards your side. It's a little bit like a casino. So So you're having a little bit of an edge. Yes, it might not work 100% of the time, but in the long term, those edges are gonna pay you off and keep you consistent. Now, the indicator that I was gonna show you that I'm using is quite simple, but I really, really like it. And it is linear regression by chart time. Now, this is another thing you can just throw on there. When you're all set, right? It looks like a Bollinger Band, but it's actually doing linear regression analysis on the price action. And it's telling you that any time that the price is out of more than 2-3 standard deviations, that will plot it and it will give you an indication that is way out of whack. And that is, for instance, doing it for 150. You can increase this or decrease this. I would leave it to 150. But you can see here, for instance, it will tell you here, these candles will come up and say, you're above 3 standard deviations. So there's a highly chance that this will reverse. Obviously that doesn't work all the time. You can see it here. It kind of has given you some pips, but it hasn't given you perfect pips. This one here gave you 50 pips. This one here, before it collapsed, only gave you 10 pips. This one gave you nothing. So this would have been, you would have to reposition it. But out of all the other indicators, I like this because it's not based on, we broke the Bollinger Band, which is literally the moving average, and a standard deviation of 2. This gives you a little bit more depth of the price action, and it gives you a little bit more, it's almost like a signal as well. You can see that. So let's say you've done all, like we said, we've done all the analysis, we looked at it, and we deemed, I can't remember, we're looking at this one. It's just doing the calculations now. So you've done all the analysis, you want to short from this level, let's say, and then you also see the regression analysis being short, giving you a signal. You also see your COT report giving you a signal, and all these things aligning together. Then you bring in the confluence at a higher percentage that you're going to be on the right side of the market. And then it's being frugal, getting your pips, scalping the trades, if you're day trading, by the way. And yeah, just keep staying consistent, looking for small gains, and small gains slowly build up accounts, and it builds up your payouts, gives you the confidence that what you're doing is working, and so on. So it's been, I think it's been an hour now. Are there any questions on what you've heard? I want to do it nice and short, this one. Let me know in the chat. I know it's a lot of information, but that's why I've stopped doing videos on, because I know like people, it was way too much information, and a lot of people it can confuse them and scare them. But it's the reality of how I'm trading currently, using a lot of information in the background. But when it comes to actually executing trades, all that has happened in the background, and now I can focus on the price action. Cool. I don't see any. Then we'll call it a day, guys, and hope you have a good week. And yeah, have a look at the COT report, have a look at other videos in terms of repositioning, have a look at the linear regression channels, really interesting. Also make sure you plan your trades. Don't go into the weekly bias and say, all right, I have no bias for the week. I'm just gonna go in and see what is available. Because more people have spent millions and millions, tons of millions on doing research before they go into their weekly trading. trading weeks. So make sure you at least do your own due diligence to find opportunities that might be worth looking at, and then do your ICT, do whatever you're doing, and that will give you a better edge to go into the market. So cool. You're welcome, Fred. See you, Scott. And until the next time, we'll do, I am playing a lot of paddle. This is a random thing now, but I'm playing a lot of paddle these days, and that is also taking a lot of time. So hence why I can't do so many videos. Too many interesting things going on. But I hope this has been helpful and not confusing. If you want, drop messages in the comment when you see this live, and you have questions, I'm happy to answer them. If you're in the Discord, don't be shy. Ask me a question there. I will, if I don't see it in the next 10 minutes, I'll see it in the next day or so I can get back to you. Until the next one, have a good one.